Uber just released their latest quarterly figures, a pretty good quarter all in all. Coal was fine as well, but at the time of making this video, stock is down 6%, which means we're back to prices not seen since, well, a couple of days ago. Now it's true that year on year, the stock will be approximately flat-ish. In the last 3 months, the stock would be down closer to 10% or so after the pre-market action. But all in all, I still believe that Uber is an excellent business that will continue to grow and become more and more profitable. Now, of course, the fears, which is one of the reasons why the stock is down quite significantly since October, that's because of autonomous vehicles. The likes of Waymo and Tesla could destroy a company like Uber. Now, bear in mind, I own Tesla and I own Google as well, and I own Uber. I don't think that will be the case. Especially with Waymo. Waymo and Uber have a great partnership. They talked a lot about the partnership. They talked a lot about the other players in that market, not just in the United States. In the call, they also touched on, well, the strategy for the future, how long they think that will take for the commercialization of autonomous vehicles and all of that. Fleet operators, fleet ownerships, financing options, insurance. All of that was discussed in the earnings call. It's not something that's going to happen just like that tomorrow. It's going to take years and years, and Uber, they think they're well positioned to benefit from that. So let's discuss all of it in this video. I will also make videos about Novo Nordisk and probably Walt Disney in the next couple of hours. So if you're interested in that, hit all the buttons, like, subscribe. I would really appreciate it. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So all in all, what do we get here? Revenue beat, mobility, delivery, freight, a small miss. EBITDA misses, but if you look at the miss, it's just 0.2% for the overall EBITDA metric. EBITDA margin did miss by 29 basis points. Again, not by much. If you want to look at a big beat, that comes from free cash flow. Free cash flow beat by 26.4%, and that's up over 120% year over year. Take rate is up, monthly active users is up, trips are up as well. For Q1, that's a small miss as well. For gross booking, 1.7%, but they did say they're going to take a 5.5 percentage points hit from currency headwinds to the total reported year over year growth. So we have to take that into consideration. Now, you've probably seen also a huge beat, well, depending on where you're watching your news, but a huge beat with regards to earnings. And with regards to that, so they say here net income attributable to Uber Technologies was $6.9 billion, which includes $6.4 billion benefit from a tax valuation release and a $556 million benefit pre-tax due to unrealized gains related to the revaluation of Uber's equity investments, which you can see right here. So they've got equity investments in Didi, in Grab, I believe that's still 12-13% or so, Aurora, Delivery Hero, Lime, and Joby, basically $8.5 billion worth right now. Equity stakes, liquidity position sits at $7 billion. Now, of course, they first touch on the autonomous vehicles thing. So this was one of the first slides. Uber is well positioned as AV tech advances, with several partners added already. So you've got here the already existing Uber partners, Waymo, ReRide, Pony AI, which I believe went public not so long ago, AV Ride, Neuro, Aurora, and all the rest. And then, of course, they added NVIDIA there from the most recent announcement. Other players, potential partners, would be Baidu, Zoox, Tesla is still here, Mobileye, etc., etc. We'll see what happens in the future, but this slide basically shows that, look, Uber knows very, very well that the autonomous vehicle future is going to come in the years ahead, and they're well prepared. They then said there is a over $1 trillion opportunity that autonomy can unlock in the United States alone. How do you reach that? Well, it's a percent of US urban vehicle miles traveled by price per mile. So as you go under that $2, you can see this grows quite significantly. But significant commercialization challenges remain. So they talk here about the 5 things that need to happen, need to enable regulation, scalable underground operation, a high utilization network that can manage variable demand with flexible supply, a cost-effective scaled hardware platform, and a consistently superhuman safety record. They think that Uber can help AV partners navigate these challenges. And I think that them partnering up with Waymo, that is already developing quite rapidly, is going to show exactly that. Moving on to some comments here, Uber ended 2024 with our strongest ever quarter as growth accelerated across monthly active platform customers, trips, and gross bookings. Our performance has been powered by rapid innovation and execution across multiple priorities, including the massive opportunity presented by autonomous vehicles. We enter 2025 with clear momentum and will continue to be relentless against our long-term strategy. Record demand in mobility and delivery helped us grow gross booking faster than the high end of our guidance, and we closed out 2024 exceeding our 3-year outlook for gross booking, adjusted EBITDA, and free cash flow. We believe we remain undervalued despite these strong fundamentals and plan to be active and opportunistic buyers of our stock. As you remember, earlier in January, they did announce an accelerated share buyback program of around $1.5 billion. And last quarter in Q4, they bought, I think, $555 million worth of shares. So all in all, what did we get for the quarter? I mean, look at the growth rates here still, and some of them are actually accelerating. So monthly active platform customers up 14%, trips are up 18%, gross bookings up 18%, and a bit higher on an FX neutral basis. Revenue up 20%, income from operations up 18%, free cash flow up 122%. So yeah, I mean, this company continues to grow and becomes more and more profitable. They also said a couple of extra things here with regards to autonomous deployments and partnerships. They launched autonomous ride-hailing service in Abu Dhabi in partnership with WeRide, marking the first time autonomous vehicles are available on the Uber platform outside the United States. Additionally, began delivering Uber Eats orders in Austin and Dallas via autonomous sidewalk robots in partnership with Avride, and in Osaka in partnership with Cartken. Lastly, formed a joint initiative with NVIDIA to collaborate on new solutions to support the development of AI-powered autonomous driving technology. Now, I don't know if you remember, but during the Tesla earnings call, they did talk about FSD in China and how the training is going there. And if Tesla is able to train just based on available videos online, what's to stop companies or partnerships like Uber and NVIDIA to do the same thing? That's an open-ended question. With regards to memberships, and this is also one of their strengths, Uber One member base reached 30 million, growing roughly 60% year over year. They launched Uber One membership plans in 6 new countries, bringing the total number of countries with Uber One membership plans to 34, including all delivery countries. Additionally, they launched Uber One for students to new countries across Europe, Middle East, Asia, APAC, and LATAM regions. So all in all, this is what you get here for the last couple of quarters. I mean, this is a company that is still growing quite nicely. All in all, the different segments of the business, you've got mobility, delivery, and freight. Freight is the one that's not really growing that much, and adjusted EBITDA is still a loss here, but all the rest doing quite well with deliveries actually going up. Then looking at their 3-year outlook that they provided back in February of 2024. So gross bookings for 2024 increased 21% year over year on a constant currency basis. The previous outlook that they issued previously, well, the target was mid to high teens CAGR. Adjusted EBITDA growth 60% year over year. The target high 30s to 40% CAGR. And then free cash flow as a percentage of adjusted EBITDA on an annual basis. 2024 sits at 106%. The 3-year outlook sits at over 90%. So again, they're performing very well. Then I do want to touch on this comment made by Brian Stoffel, a great guy, great account also on X to follow. So he said here that my first pass on Uber earnings, one thing I don't love is 30% increase on sales and marketing, becoming just a 20% increase in revenue, and that's with an increase in revenue margin. Now, it's true, sales and marketing did increase around 30% or so, but if you look at the dollar amount, right, if you look at dollar amount for this quarter alone, sales and marketing increased $274 million, revenue increased $2 billion. Then if you look at the whole of 23 to 2024, sales and marketing basically flat, but look at what happened with revenue. It's up over $6 billion. So yeah, it's true that if you look at the percentage increase, it's higher than revenue. But on a dollar amount, I mean, I'm not really that worried here at all. And so overall, what do we get? Well, we get Uber stock that will go back down under that 20-day moving average, under the 50 and under the 200-day as well. Let's see if it respects that uptrend line. Previously, it did respect it. Yes, we did go under it a little bit, but then we've seen a nice rebound. So yeah, I mean, we're back to prices not seen since a couple of days ago. Quarter was a pretty good one. Commentary on the call, my opinion, quite positive as well. Of course, there's always going to be that, oh, maybe autonomous vehicles might or might not destroy the business. But to be honest, as long as this company manages to grow top and bottom lines quite comfortably, actually, I think we'll be fine. Plus, I really like the leadership. I like the CEO. I don't think he's a stupid guy. I don't think he's ignorant. I think he knows exactly what's coming and he has prepared the business accordingly. As you know, the market can stay irrational for a long period of time. So all in all, Google, Uber, both of them reported quite good quarters in my opinion. If the market doesn't like it, that means I get the opportunity to add more to my already quite big positions. So what do you think? Let me know down in the comment section below. Like, subscribe, all of that, and I'll see you all in the next one. Bye bye.